Now that we know how to determine our long-term perspective, let's go to intermediate term perspective. So intermediate term perspective, 4-hour and 1-hour charts. We just went over that long-term perspective, right? The monthly, weekly and daily charts, and now we will need to determine our intermediate term perspective. So the intermediate term perspective gives us the answer to how price should move to get to that long-term perspective draw on liquidity, right? So remember, long-term perspective is the why price should go to a specific level, and that intermediate term perspective is how price will get to that specific level. The intermediate term perspective is how we get to our long-term perspective draw on liquidity. We want to utilize the market structure and PD raise on this time frame to help us get to the draw on liquidity. So the highest probability trades are when these two perspectives align and the order flow is aligned. So long-term perspective and intermediate term perspective being aligned is very powerful. As with everything in trading, our analysis starts with the draw on liquidity, which we determine from our long-term perspective timeframes, right? The monthly, weekly, and or the daily analysis. And after we've determined our high time frame weekly or daily draw on liquidity, we want to wait for our intermediate term perspective timeframe to break market structure in the direction of our long-term perspective draw, and this aligns both of these timeframes. Using draw on liquidity and premium and discount arrays determined on the long-term perspective, we want to align ourselves with the weekly candles or the open low high close or the open high low close, right? From lesson number 1, that power of 3. We want to determine which weekly profile is likely in the current week, using the economic calendar and focusing on the day with high impact news events for injections of volatility. So over here we've got a gold weekly chart, right? We've got these relative equal highs up here, an easy draw on liquidity. Sell stops have been liquidated on the sell side over here, right? So order pairing again happening over here, starting to trade up, up and up, and back into that discount array, which is this weekly breaker, right? So our premium high is over here, discount low is down here. We've got this weekly discount breaker. Now we've got our long-term perspective, right? So now we want to drop down in a lower time frame to see if our intermediate term perspective is in line with our long-term perspective, and then we can frame a high probability trade, or at least a high probability draw on liquidity. So once we go into that breaker, where do we want to go? External range liquidity, right? Those buy stops are resting above this high, engineered liquidity. We know our longer term perspective is those equal highs over here. And let's dive into a lower time frame to see what that looks like. So we've got this 4-hour chart for gold, right? This is our intermediate term perspective, and we need this intermediate term perspective to align with our long-term perspective. So our long-term perspective is bullish, right? We see those buy stops high up in the range, and now we need order flow to be bullish also on the 4-hour time frame, because then both of those perspectives are in line. Now we can see this sell stop rate down in that, remember that weekly breaker, right, is down here. Now we have this 4-hour market structure shift, and then we can say, all right, long-term perspective and intermediate term perspective are aligned, and now we are good to go for more bullish price action and bullish order flow. So over here we draw out our weekly opening price, right? We want to know in which day of the week we are trading lower and higher, and does it make sense for us to manipulate lower first on a weekly candle, right, to continue up higher and align that with high impact news events. So let's look at the economic calendar. We've got Monday, no news. So what can we expect on a day without news? We can expect the daily candle to accumulate inside its range, right? So we can clearly see on Monday we don't have too much of a movement, and it starts to accumulate. On Tuesday we've got high impact news, consumer confidence, so this could be a day where we can see some volatility injection, right? And Monday being accumulation, we can expect an expansion to happen on Tuesday, coupled up with that red folder, right? That high impact news. And also notice how we are below weekly opening price over here, right? And running Monday's low. We can expect the weekly profile to be a Tuesday low of the week, and with the high impact news it makes sense, right? So we have that structure shift on the 4-hour, right? So intermediate term perspective lining up with that long-term perspective, and then high probability we have created the low of the week with this news manipulation. Right, so outlining the news events from start to finish, right? Monday, no news. What can we expect? We can expect consolidation or less volatility. Then Tuesday, high impact red folder, right? Volatility injection. So what do we see? Low of the week being created with that high impact folder below weekly opening price and running Monday's low. Those sell stops have been liquidated and order pairing happened over here. So on Tuesday we move up, breaking structure, and then long-term and intermediate-term perspective is aligned, right? We've got that 4-hour structure shift, and then our weekly drawn liquidity is in line. So outlining that low that got raided, right, over here. Sell stops have been liquidated, order pairing has happened. Tuesday, move up. Now Wednesday, we've got another high impact red folder, so we can assume more volatility is coming into the marketplace. We can see this happening over here, right? We have this bullish order block supporting price to continue up higher. Another bullish order block being formed, continuing price up higher. Now, what happens on Thursday? We don't have any news on Thursday, so how does that look like? We have an indecisional day, right? And then at the end of the week, we have another high impact news red folder, right? So another volatility injection over here. So keep in mind, very important, if you're looking for your long-term perspective, your intermediate term perspective has to be in line. And then we look at the economic calendar, right? Which day is it most probable to create low of the week or high of the week, right? So without news on a particular day, you can expect more of a accumulation or consolidation day, right? And then we try to frame our setups on those days with the high impact red folder. So on Friday, you can see actually continuing up into the range, right? With this fair value gap, internal range liquidity, right? Where we're going to external, which is above this high, and we're forming a bullish order block in the process, and then continuing up higher. And eventually we take out those buy stops, right? All the way down from our long-term perspective, that that weekly breaker, right? And then continuation up all the way into the buy stops. So after we take that external range liquidity, those buy stops, right? We can expect what? From external to internal, right? So what would be our next drawn liquidity? If you guess that internal range liquidity, you are right, because we go from external to internal. Now, this is counter trend, right? Because our long-term perspective is bullish. We expect price to go higher than this, but with a intermediate term perspective being bearish, the counter trend draw should be correct, because we still have to think about that external to internal range liquidity, right? Now this is our next draw on liquidity, right? That weekly fair value gap. So with this weekly fair value gap being the draw on liquidity, even though our longer term perspective is bullish, but it's switching right now from external to internal. Now we need the 4-hour chart to be in line with our idea that we want to draw into this weekly fair value gap, right? So let's drop into that 4-hour time frame. Before we can be bearish, we need to see that buy side rate, right? We see that buy side rate up here. Now market structure shift happened down here. So now what do we have? We have our longer term perspective, which should be the drawn liquidity in that weekly fair value gap, is in line with our intermediate term perspective, which is that 4-hour market structure shift, right? So drawing out our premium and discount levels from this high to this low, we can see price action moves into that fair value gap up here and then continue down lower. Drawn liquidity still that weekly fair value gap. So outlining that 4-hour premium order block, right? And coupled up with that fair value gap, high probability area for rejection. So that market structure shift on the 4-hour perspective, right? That intermediate term perspective is now in line with our long-term perspective, which is the drawn liquidity in that weekly fair value gap. We can see this premium array, which should be the next area where we can frame our setup. And you see it hits it and then trades down lower. Again, Important, look at the economic calendar. What day of the week is it most probable to create high or low of the week, right? So we want to couple up that high impact news with our intermediate term perspective. Now look at the economic calendar. What is happening on Monday and Tuesday? There is no news on Monday and Tuesday, right? So what can we expect? Consolidation, right? Not too much volatility injection because we've got that high impact news on Wednesday, CPI, right? And then on Thursday we've got PPI, and then closing off the week on Friday we've got consumer sentiment. So expecting nothing on a Monday, no news, no news again. Tuesday. Now what can we expect for Wednesday, right? What do we want to see when we're bearish? We want to see a high of the week being formed, right? And then that is coupled up with a high impact news event. So in this case, we got CPI, and then it's most likely to form high of the week with that news folder. So CPI, volatility injection, and remember that 4-hour bearish order block, right, in premium, that is the area where we want to trade from. So this is a 1-hour chart, and then we can see we hit that area over here. High of the week being formed, rating Tuesday's high. So buy stops have been rated again. And think about market structure, right? We see this short-term high here, intermediate term high, and then short-term high here. So we're forming a market maker sell model right now, right? Bearish order flow. Another high impact news folder running Asia highs over here. So we want to see that external range back to internal, right? And then we got this external rate over here. Order pairing, high resistance liquidity run, because we see an immediate rejection after we take out that high, right? And Friday we have another high impact red folder, right? Volatility injection, making it even more probable to draw into our longer term perspective, which is that weekly fair value gap, right? We got a premium fair value gap over here. We drop or we dip into that premium fair value gap, and we still continue our way down into sell side of the curve.